Okay, let's see if I remember how to do this here, huh? Actually, what do I do? Hey, welcome to the closing beat, everybody. Happy Monday. No, is it Monday? It's Monday. Happy Monday. How you doing out there? It was a bit of a late night for me, so a little bit tired here. And thanks for everybody that met us up in, not Atlanta. We were in Statesboro last night. That was cool. Saw a few of you out there. We'll see you again in tomorrow, right? So tomorrow, if you're not familiar, there's a drum corps show in just outside of Atlanta. We'll be at that show as well. If you're in the area, want to stop by and say hi, that's cool. That's where we'll be. I forget the name of the school, but just a little stadium out there. But we got home late because we were dodging weather and such. So there'll be no closing beat tomorrow, by the way, because we're going to leave here about 4 o'clock to head on up there, or sooner maybe. And yeah, I won't be here for that, but we'll be back on Wednesday, so no worries there. We are financial advisors here at Jazz Wealth. Just have a little bit of place in our hearts for drum corps there, so we'll be up there enjoying that. And thank you for all of you who have checked us out, jazzwealth.com. We obviously do this show every day, so you guys keep us in mind. If you want to work with a financial advisor, know that we work with anybody, right? Going to help everybody keep their dough straight there. Last week, our Wine and Wealth class, which is a class we do for clients, excuse me. I'm not sick. We do for clients. Eric actually ran over some of the updates in Nest Egg, so a lot of good questions there coming in from clients. I love it there. That's awesome. And in our notes from Jazz this weekend, I actually took a minute to cover our returns. I like to talk about our returns. We manage our own funds here, so it's really important to keep you updated on what we're doing and how things are going there. So if you want to read the notes from Jazz there, you get to see how things are going. And got a lot of good questions from that one as well. All right, as far as the stock market goes, on Friday, we were not here. The payroll numbers came out a little bit better than expected, came in at 372 versus 265 or 256. Somebody could tell me that one there. There was a revision down. So what they do is they come out with the jobs numbers, the unemployment rate and all that, and there's usually a revision that happens ahead of time. They revised it down by 74,000. It really wasn't a big deal. There still was a beat. Everybody's happy there. 3.6% unemployment rate. Everybody's got a job that wants a job out there. The headline numbers look good. I have a little bit, tiny bit of a problem there with under the surface there. Household surveys that they do inside of that number actually showed that there was a slowdown in employment 2 months in a row. Not a big deal. One of the other things that came out there was prime employment age. I got it here on the chart. It updated today. The prime employment age is known as those that are between 25 and 54 years old. Well, we're seeing a little bit of a downtick there. Not a big deal. It's just not a stellar, home run employment number. So little things under the surface could just give you a little bit, pause that maybe the economy is not actually running on all cylinders there. PCE numbers came out as well, gave us a clue that, by the way, the inflation numbers come out this week. The PCE numbers last year, personal consumption expenditures. So that number came out. It's a way to look at inflation, get a little bit of a peek. I've done this before where I was talking about that number going higher and then inflation shows higher. Well, we're likely going to see a peak in inflation. So you don't have to guess when the CPI numbers come out this week. Will inflation go higher? It's not likely going to show that it's gone higher there. So we'll actually start to see a little bit of a peak, which is good news for the stock market, hopefully. Bad news for if you are focused on rates at the moment there. And I say this because inside of that data point, I only point this out just because I think it's interesting. If you don't, please let me know. I don't have to cover this. There are 48 different data points where they track to see did prices go up or down. Well, at the beginning of the year, there were 33 data points that showed that there was one of those areas of focus showed that was in short supply. So 33 indicators of short supply. We're down to 14 now. So that's obviously a huge decline, right? Month over month or year 6 months, over 6 months, I guess you'd say. Huge decline there. So what that means is that there are plenty of supplies out there. Prices can come down now. You're starting to see that. So I think you're going to see that there start to reflect in the CPI numbers. We get all of that this week. We get CPI, PPI, which is what the producers pay. Do they see inflation for the products that they're making that they're going to sell to you? And, we got retail sales numbers as well. And it's the start of earnings season. So all kinds of good stuff going there. Let's do the fun stuff, talk about the stock market today. Look, you got a nice little bounce, right? You feeling good about that? We saw it over here. Oh, yeah, I feel good. I got a little bit of a bounce in my stocks. It's not looking so bad out there. I don't have to worry so much. I don't have to look every 3 seconds. Well, we've seen that again. Last week was a really good week there. It is really up to the bulls at this point to put their foot down and say, this is the bottom. And actually, I'll go like this, that this is the bottom. That remains to be seen whether, in fact, it is actually the bottom, right? There's no doubt. We all know we could just fall apart here. And so we want to start to look and see where's everything that looks like this? Where's the best performing stocks? I actually ran a quick scan just to see where are the best performing stocks. And here's what we came up with. It's not good news. Here are I'll start this way. Here's a list of stocks at the bottom. It was okay, the beginning of the year up until right when we started that rally there, what were the worst performing stocks? They're not in any particular order there. We just put them up to show you. You got Novavax in there, Roblox, all kinds of names, Teladoc. You know these names, Affirm. They've all been beaten down after having a pretty impressive run there. You got Snowflake, Plug Power was one that caught my attention. Rocket Mortgage, of course, is one that's been paid attention to lately. Plantair down almost 58%. Datadog down 54%. Okta, of course, you can see it. Robinhood down 61%, Wayfair 76%. These are just the large cap names that we looked at. So lots of nastiness here, right? To start off, these are the dogs. That's the way to say it. These are the dogs of the year, right? Well, anyways, we said, okay, let's take those. Let's take every other stock that's available, and let's see what the best performers were. And you know what happened? All of these stocks come up as the best performers. Just in the last 3 weeks, here's the performance of all those stocks. Novavax kills it, 94%. These are big numbers, right? You've got Roblox up 60%. Go on over here because we were talking about Wayfair, Robinhood, 30% gains there. Datadog, all the beaten down names. Rocket Mortgage, 34%. These are known as the dogs, the trash area of the market. It's not the dogs of the Dow, but it's the dogs in general. And so all the money's going over here. So the best performers are coming from the weakest spot. Is that good news or is that bad news? What do you think? By the way, anything that was beaten down in healthcare has had the best performance. We've got Moderna in here, of course, Novavax and stuff. So though healthcare has had the best out of all the best gainers there. The average decline actually, if we go back here, out of all of these, 60%. The average gain is just over 41%, all these dogs. Good news or bad news? Well, a lot of people look at that and they say, well, that's good news because, yeah, these things don't move the market. These are not the stocks that are going to cause everything to just take off there. But these are stocks that have been severely beaten down. It's good to see people willing to take extra money and instead of go straight to the index, they're willing to bet on the dogs here. So a lot of people would say it's good news because of that. Well, it's really bad news because it doesn't impact the market in any way. The market can still move lower and these small little group of stocks can continue higher. And one other part about this is, I've shared this with you, you know that if you have a 60% down move, you can copy this chart if you want. Let's see, all the way over here, the average move is a 60% down move on all those stocks we just showed. That means we need a 150% rally to get back to break even. Now, Novavax is getting really close, right? So lucky for you if you have that. But remember, it is not, people fall into that trap of dollars versus percentages there. It's not the same thing, right? It's a little bit different. I've had people comment on the videos about that, and it's like, I don't want to pick on you, but we got to pick on you a little bit here. As for the S&P here today, not a lot of good. Your big names, they held you back, right? They're moving the market up. They're moving the market down. I'm talking NVIDIA. I'm talking Alphabet. All the names that are more heavily weighted in the S&P. Your Meta. I can't stop saying Facebook, but Meta. Netflix, Amazon, Tesla down 6% as well. We'll cover that in a second. The active area for the day is going to be utilities. And I know you don't like when I say that, but this is a boring area, but it's one of the big movers right now. This is where people are looking. Utilities, and healthcare. So if you're not familiar with those stocks, you may want to as these things take a break. In fact, utilities were the best performer today and the only sector that finished positive. So that very clearly shows you relative strength in utilities. You may want to take a look there. The NASDAQ was beaten down on the day, and I don't have to go over that. That's because of your Alphabet, Microsoft, Apple, Amazon, the big names there. They were the ones that dragged the whole NASDAQ down today and quite a bit. The Dow was only down about 0.5% on the day, and the reason for that, I just lost my screen. We'll go back over here just to make this still like it's some kind of production that you can count on. There we go. There we go. Come on. Hit the thing. Reason for that today was some of the bigger stocks. And remember, when we say Dow, so the Dow is not market cap weighted. The Dow is price weighted. So higher price, higher influence on the Dow there. Visa, up on the day, just small gains here. Procter & Gamble, $150 stock there. IBM, 3M, Walmart, and Johnson & Johnson, which ever so slightly showed you a gain there. Those were able to offset the losses that you saw in Nike, which were bigger, right? 2%, almost 3%. Disney and Intel, down 2%. It's only a $37 stock. Intel, if you were to look inside of the Dow, is the smallest stock in the Dow. It has the least impact on the Dow because it's only $37. All right, so not going to do the same thing. Oh, sorry. Let's go over here real quick. Bonds moving higher means rates are moving lower there. We got the 10-year. I believe it closed under 3%, so good news for the mortgage shoppers out there or those of you that are trying to sell your homes and hoping someone comes along to buy it. Crude oil down about 1.25%. It was down more, but it's trying to find its floor in here. Remember, it is the summer season, so you're not going to see a severe discount in the price of oil. You don't have to worry about collapses or anything like that. And I'll just point out gold. I don't know what gold's doing. I'll be honest with you. Gold has zero interest in anything that's going on right now. Quite a bit down there. I want to point something out real quick. Bonds. Remember the yield curve inversion, right? Usually we look at the 2-year and the 10-year. The 2-year should be trading at less, as far as the actual rate, should be trading at less than the 10-year. Occasionally what happens is the 10-year trades for less than the 2-year. That's called a yield curve inversion. And back in April when this happened, you could look on Google search. You could look up Google searches or keyword search or whatever it is and just type yield inversion. All through April, people were searching, what the heck is this, man? I need to learn about it. We did a whole class on it and everything, so you understand. It was a big deal then. Well, what's happening right now? Isn't this funny how when you want to pay attention to something, you will. When you don't, you won't. Right? When nobody's talking about it. This is basically a spread. We're showing the spread between the 2-year and the 10-year, right? And when the spread goes negative, that's an inversion. So here's the one back in April. Otherwise, it should look like this. We should never really have an inversion in a healthy economy and a healthy stock market. Right now, we have a yield curve inversion again. It's now been 6 days. Nobody cares. Remember the very first time? On the way down to the inversion, we were all focused on it. Oh my God, is it going to invert? Because we know that means recession. That's not true. But we know, it could be in a recession. We're not talking about it now, right? It's a bigger deal now because we're trending down there. We are not extended, and we're holding that way. So those of you that are looking for a reason to say recession, there's your indicator again. Why is it not a big deal? It doesn't matter. We're not talking about it. It's interesting, isn't it? Anyways, we got new highs and lows. These are a lot of the same names, all right? So all of the new highs today were healthcare related. Just another way to point out, hey, that's where everybody else is excited. If you are a stock picker and investor that likes to build portfolios, you got to have some healthcare or you're getting left behind. Humana also hitting new highs as well. And I think Vertex was the other one? Yeah. Vertex hit new highs. All of these showing relative strength to the stock market and to the sector as well. If you're not familiar with that, you may want to learn. Celanese, well, new lows. So there's only a couple new lows. I just wanted to show the ones that were most extended, as I have been doing here for you. Down 20% from the blue line that you see on the chart. That's a 50-day moving average. It is a midterm indicator of trend. That's all it is. So down 20% there. Royal Caribbean, down 66% off of highs. I got the question today, I want to buy some more cruise line stocks. What should I buy? And, you may want to look at the largest. You may not want to look at some of these other brands here just in case things get a little rough for them and they need to raise more debt and they find out they can't and have to suffer through it, maybe not even make it through it. So Carnival Cruise is actually the largest cruise line operator of all the publicly traded ones that we have there. So little help there. All right, let's do some stocks in the news, and then I will take your questions here. First up, we got Alibaba. So it was down 10% today. It was kind of interesting because they were talking about fines that the Chinese regulators imposed on them. This was not for anything new. This was actually widely known in China, widely known ahead of time, and it's not for new offenses. These are for, what was it? Last September, somewhere in there. The regulators came after them for anti-competitive practices. That's their fancy way of saying you're doing things to block out other people from competing. Yes, that exists in China as well. It's not a new issue. It's just the fine has been levied against them and a couple others as well. And so that's the reason for that. I'm not sure I understand why people responded that way, but it's okay. This is the the stock that is basically Truth Social. If you're following that one there. Big bounce today because the Elon Musk Twitter deal appears to be done and dead, or at least he wants it to be that way. Twitter moved lower on the day. There goes your, I don't know if you know this, but Twitter and Tesla have had more than a 50% correlation since the start of him wanting to buy Twitter or whatever. Well, that's probably the end of that. I mentioned Tesla as well was lower on the day in that news. I think initially it was higher, very briefly there. So I found that one kind of interesting. Watsco, let's go over here real quick. So obviously, you can see the stock is declining in there. If you looked at Barron's over the weekend, they said, hey, people's fears about this, because of housing, of course, a little bit overblown. Stock should actually be higher, and that was good enough to lift the stock today. People like to read their Barron's on the weekends, and it shows. What's last here? Uber. So Uber is in the news there. The Guardian was the ones that actually put this up. So the Guardian had an article. It basically said they broke the law as they were expanding, and Uber executives actually agreed with it. So they basically lied to people. It's kind of fascinating to watch, although we all, even Uber drivers are kind of like, I don't know, something's up. Now it's actually coming to light there. So the stock was down about 5.1% lower on the day. Not good for them. If you have any questions, I'm happy to take your questions here and hang with you for a little bit. Remember, it's sort of quiet now, right? Starting, what is it, tomorrow after? What's tomorrow? Tomorrow after the close, I believe, we start getting the earnings. They start trickling in a little bit from the banks, right? Big banks start the earnings cycle sort of unofficially. And then it just goes all hands on deck from there. So we will turn our attention on the show to earnings-based performance. How do these stocks perform around earnings? What do they do? Which ones have better success rates and things like that? But we'll be focused on that. And, of course, inflation, all right? Getting the inflation number because we got the Fed making their decision coming up here soon, looking like a 0.75% interest rate hike, which would be yet another record for them. And they don't seem to care. They just do whatever they got to do to keep gas prices down. That's their focus. Fascinating. Fascinating that is their focus there. So it will be an exciting week. We're just kind of getting things going here with a little decline on a Monday. If you have any questions, I'm happy to help try to answer those questions for you. Otherwise, we'll get on our way. I really won't comment on the legalities of the Twitter deal there. I think he's in for a bit of a battle. I don't know the inner workings of what he's doing there, but you can't just say, yes, I'm going to buy your company, make an official offer, get your official offer accepted, and then just walk away. So it will likely prove to be sort of costly for him, and that'll stay in the news as well as that kind of comes going through the process there. Yeah. I saw Rivian laying off some people there as well. I don't know what they're doing. Yeah, we'll see. We'll see what happens there. Oil charts. I think you're looking at oil stabilizing in here. You're gonna have your bounces and your declines and stuff, but you're not gonna see anything just fall apart. Prices seem to have been kind of resetting to an area now to include OPEC's increase in production, which was planned for months and months and months. So. It has not been because Washington asked them to increase production, by no means. That's unfortunately how they're spinning it, but the market's like, what? Come on, man. We know what's going on here. Is Royal Caribbean the second largest cruise line by market cap? Yes, they are. Yep. Without employment numbers falling, can we expect to see a short decision to the tune of 1 year? I'm not sure what that means. What question is there? I'm not sure. As you approach 25, your long term becomes shorter. Yeah, it becomes more important that you get that right, too. The long term all of a sudden sneaks up on you and you go, wait a minute, I've been picking stocks this whole time. I haven't been participating in the growth. So there has to be room, probably for a lot of you watching. You like doing your stock thing. You like doing a long-term thing. Most of our clients actually do the short-term trading stuff. They like doing that. But we do the long-term stuff because there's times, and we have fun with it, there's times where the stock picker will be beating the long-term investor and the long-term investor will beat the stock picker. These things go back and forth. And it's kind of fun to have that back and forth there. J Block, I would agree with you that Royal Caribbean is the better product, but Carnival Cruise is the bigger product at the moment. Yeah. Any oil stocks look interesting? So for me, I wouldn't be interested in actually looking to buy oil stocks here. There's no reason to believe that so when you buy a discount, you're hoping to buy that discount somewhere near the end of the discount, right? I mean, everybody wants that. Well, oil has discounted itself so sharply and so quickly that there's no reason to believe you're going to miss some magical rally higher. So I think you're going to have a lot of chop and a lot of time of just like, why is nothing happening? And for that reason, you don't want to put money to work that isn't doing anything for you, right? And honestly, you'd rather think that you have a discount. Let's say it's Uber, because I'm looking at that chart. You'd rather think and have some kind of analysis that says, Uber is discounted and has reached the end of its discount. Okay, let's say you believe that. You'd rather do that and find out you're wrong and have to take a small loss than put money to work and find out it's not doing anything. It's not going anywhere, right? That's usually not the goal for investors. So I would rather take that approach. I think it's a discount. Yes, I'd like to buy it. Oh, I was wrong. Didn't work out. Versus just watch money slosh around, lose to inflation, do nothing. Yeah, Doc's got it right. Most people are like that, Stocks keep you going. You have a little fun with some stuff. It's by no means a large percentage of your entire net worth or your retirement or whatever you're doing, but it keeps you engaged. It's fun to watch as well. I agree. Can Carnival climb out of all their debt, or will they have to be the next? Yeah, it remains to be seen, right? Because they need more debt. They're going to have to take on more debt, but they have to take it on at 100% higher rate than what they had at the beginning of the year. That's tough. Right? I don't know how that plays out. Right? For the moment, they can go raise that money. It's just going to cost them more. What happens if they all of a sudden can't raise as much as they like? What happens there? Yeah. When is a market trend considered as changing direction? So there's people look at it in two ways. So there's the economic side of it. Oh, sorry. And then there is the technical side of it. So for example, the technical side would be something like this. Hey, here's a downtrend, and it's not perfect, right? It's just a series of lower highs and lower lows. And at some point, it breaks that and starts making a series of higher highs and higher lows, not accounting for today in this case. And so people will look for that trend to break right there. So there's a couple ways to look at it. You could say, I will be interested when the trend breaks. And, it's rough. You draw in your line, and you can see this one's not perfect. Other people will be more aggressive and say, I see the series of lower highs, lower lows, and when we get to a point where we make a lower high and a lower low, lower high, higher low, that puts them on alert. And people will say, okay, I'm going to watch this stock. Maybe it's going to break the prior lower high, right? And so when people want to be aggressive, that's what they'll do. Probably why you see such a large move right here. That's the moment you break through those highs. It just happened that the Chinese market closed at that point. This is just referencing the Chinese market. And so the first opportunity to buy was the next day. Well, we were sleeping here in the U.S., so our markets weren't open. What happens? Our markets open, reset to the price of this in China, and you see a large gap. That's probably purely because those aggressive traders wanted to be a part of that. Others will buy when it breaks the downtrend, right? They'll wait for the full rally back to the top of this downtrend. When it breaks, they buy. That very likely could be what happened right in here somewhere. So that's it. It's not foolproof, of course. I mean, you can be wrong, but that's two of the technical areas that people like to look at. And there you go. A little lesson you didn't see coming your way on a Monday. Yeah. Shallon says, how do I get in touch with you if I'm looking for short-term investing? We do not do short-term investing. I like to help. I like to talk about it, of course, but we are long-term investors here for long-term goals, retirement, long-term planning goals, and things like that. We like to focus on that. Yeah. Yeah, that's true. At least Disney's got other things to focus on, and more particularly, their digital media is a big chunk of it. So if the cruise line industry takes a hit, that's not taking them down. Slight hit. Yeah. Andrew says, could you use the fib channel tool for the two lows and pull the recent higher high? Yeah, you can use any visual tool you like. I've never really gotten attracted to those myself. I just gotten used to just kind of seeing that 50% pullback or wherever what your area, maybe 38%, whatever you're looking at. I've just kind of gotten used to seeing it on the chart. But anything that a platform offers in terms of moving averages and oscillators and different indicators, it's just there so you can mark a line more easily than sitting there and scratching out stuff left and right. That's it. People often find that, oh man, when we get to the 2 standard deviations on the Bollinger Bands there, it's due for a pullback. Well, you put the line there. You chose 2 standard deviations. If you'd have chosen 1 standard deviation, you'd have thought there was a pullback days ago, right? Or room for a pullback days ago. So just keep that in mind. It's a tool to help you visualize better. It is not a magic potion. I don't know. Yeah. There you go. Does your entire or majority of a person's portfolio need to be managed by Jazz? So we have our own funds. So our clients actually, the deal is I can't take your money and like go to Disney or whatever, but I can do all the investing. On your side, you can take the money. You can do anything regarding your account. You just can't do the investing. So in that case, you would have no physical say in it. Of course, we talk about it. We want to be engaged with you, but you would click the button. It would look like you were placing an order, and then it would just cancel. Yeah. Dustin the Eagle. Well, that's cute. Thank you. Oh, I like it. Yeah. Oh, some of Fidelity is some for... Yeah, the only thing we can't do is a partial transfer. So you could say, like, I have an IRA and I have a Roth IRA. You know, you take the IRA because that's not my active account, but I like trading my Roth because it's more aggressive and it's tax-free, so I buy and sell more stocks. You could do that. What we can't do is you can't say, like, here's my Roth, take X number of dollars out of it, leave the rest for me. At the moment, we can't do that. It's possible, but we just can't do it. Yeah. Is this a good time to enter semiconductor ETFs? I got that question a couple times. Yeah, so I don't know which one you're looking at, SMH or SOX or whatever you're trying to play along with it. I always reference the SMH. It's the largest and oldest. And so I don't disagree with it. No. Where'd you go? Over here? I can't. It's been a long day. So I don't disagree with that at all. Now, take what we just talked about and ask yourself, where and when do I go and take my shot? Do you just take a random shot because you watched the guy on YouTube say he doesn't disagree with you? Of course not, right? You look and say, well, I learned about downtrends there just a second ago. How aggressive do I want to be? Do I want to bet that if this makes a higher low and subsequently trades above this, got to use your imagination a little bit because it wasn't like that last chart, right? We're trying to predict in the future. It pulls back to, say, 200. You can picture what it looks like. It bounces, and then when it trades over, say, 210, you say, okay, I want to be aggressive. I want to do it. That's one. Or you could say, I see the downtrend. It's pretty clear. You could draw a pretty easy line here. I'll tell you what, when it gets over that, I'll play with that. That lets me see a lot of buying along the way, and I can feel a little bit better about buying. You could do it that way. So you just have to make a decision how aggressive you want to be. By the way, there is nothing wrong with saying, I'm not that aggressive, but sometimes I get a wild hair. You could say, I'm going to take half of the position when it breaks that prior higher low, right? Lower high. And then I'll take the other half when it breaks the downtrend. That way, if I'm wrong and that prior lower high doesn't work out, I didn't lose as much. I was willing to take a shot anyways, right? So people do that as well. It's popular in day trading to do that. When the markets get volatile, people will say, take half the risk and just make the stop that you would have used, just make that twice as big. That way the day-to-day volatility can't ruin you. You can always throw the other half on at some point, but at least you can allow for more volatility. Something we've seen a lot of this year, huh? Yeah. All right, I'm out of here. Remember, no closing beat tomorrow. If you are in the Atlanta area and want to stop by, it's like Eccleston High School or something. We'll be outside for a little bit. They changed the stadium, so I was trying to figure out where that was. We will be outside for a while. Eddie Henderson Stadium at Midtown High School. We will be there tomorrow. Leaving here a little early. And come hang out with us. If not, I totally get it. I'm not that cool. You don't want anything to do with me. It's all good. Enjoy the rest of your day. We'll see you on Wednesday. Remember, Wednesday for the closing beat again. And you know the market's just going to have to be lower because I'm not here tomorrow. That's how things go. Enjoy.